What's up, guys? Dan here from Bitcoin and Beers, and we're going to talk to you a little bit today about crypto index funds. We did this presentation a couple of times for people live in person here in Vancouver, but we wanted to just provide a place to review the information online so that we could share it with you guys in general. And so this is going to be about crypto index funds, but before we get started, we should do a little quick disclaimer. And I do not provide professional investment advice, and I am not a qualified licensed investment advisor. This is for entertainment and your own sort of food for thought here. So please seek out a professional advice for anything that you're investing in, especially regarding Dogecoin. And we'll touch back on that a little bit later here. So to start out, what is an index fund? An index fund is a type of fund with a portfolio constructed to match or track the components of a market index. For example, the S&P 500 is commonly known to people. I'm not even totally sure that that's an index fund, but it gives you a general idea. So these are broadly, giving you broad exposure to a certain asset class. They're generally passively managed. They follow some preset rules of construction. They sort of, like I said, track the overall market. There's any number of different metrics and methodologies that are used to determine how these are made. Uh, Conversely, you'll hear about hedge funds, a little bit different. Again, this is broadly speaking. Hedge funds are alternative investments using pools of funds, and they're actively managed by portfolio managers. They have wide investment latitude, meaning basically that they can invest in any asset that they want. Um, they often use it to short markets. The fees are a lot higher in general than you might find in a passive fund like an index fund. You'll often hear of the 2 and 20 fees, so that's a 2% for management and 20% of the profits annually. So it's much higher in general. Often they're only available to accredited investors, especially in the digital asset or cryptocurrency space, which is what we're focusing on here today. And so traditionally, from a mile high point of view, there's four classes of assets in the world, right? And but you might hear people say that there's five or six, depending on who you ask or what Google search you come up with. But we'll just briefly touch on what that might look like, just to give a kind of a meta view of the space in general, no, worldwide. So we can say there's stocks or equities, like Facebook stock, for example, fixed income or bonds. Like people are often familiar with government bonds, the money markets or cash equivalents, so fiat currencies, Japanese yen, US dollars, the euro, and then of course real estates or other tangible assets like your condo or house that you might own. So crypto assets is kind of like a new asset class, right? Cryptocurrencies in general. So there's some confusion in with different people about the regulatory perspective on things. Still, there's some news coming out here and there, in regards to say Bitcoin, for example. Are things securities or not? I believe the U.S. government has recently said in June 2018 that Bitcoin is not a security. So, it's depending on what you're looking at. There, even within this uh, new asset class, there's other sort of asset classes within it even. So that gives you more food for thought there. You might have cryptocurrencies, things for payments. You might have tokens, utility tokens, let's say, or crypto commodities. And even now we've seen things like crypto collectibles. You might call them like crypto kitties or other non-fungible tokens. You know, there's a little note here about in Canada. Some members of the group have done some research, and again, this is not investment advice, but and looked into the details about whether it's a disposition when you're trading from one asset to another within the digital asset space, so one cryptocurrency to another one. And it appears the way that things are written that each trade is a disposition, so you need to pay those capital gains or losses that you might incur. Again, seek out an accountant's advice, but it's kind of still a wild west out here. So I've been researching crypto index funds and these different funds for quite a while, and late 2017 and early 2018 for about 6 months, and I went over many. There's a lot, so this is a list. It's not all of them. There's quite a few. I probably research. I didn't research every single one in detail, but definitely dozens. Um, and unfortunately, there's a kind of a trend that a lot of them are not available to the average investor. So they're only kind of often only available to accredited investors, whether or not that's the choice of the people creating the fund or if it's just a result of regulatory pressures. You can decide. But in my mind, it kind of goes against the egalitarian nature that I believe cryptocurrencies should have. So here's a chart from Autonomous Research, which is really good. They're great. So gives you kind of an idea of the different funds, how many of these have popped up over the last few years, and you've just seen a meteoric rise in the number of these kind of funds that exist in the last couple of 2017, especially. They've got 167 on this list. It says 20 that were in 2018, although this was early 2018 when this list came out, so it's probably a lot more by this point. And but some of the other ones have closed as well, so it just gives you an idea that it's definitely becoming more and more prevalent all the time. So we're going to briefly touch on a few of these different funds that I've done this research on, just to share them with you here. So we're going to talk about Economy, Polychain Capital, Prism, TAS, Coinbase Index, the Apex Token Fund, 2030 IO, or the Cryptex Fund, Coinvest, and of course Crypto 20. So we start off, we'll talk about Economy. So Economy has an ERC20 token that you can look up on CoinMarketCap. I guess when I first did this presentation, it was around number 100 on the list on CoinMarketCap, but it's probably changed since then. You can find it and find the website if you want. But basically, that token is not the underlying. So there's a bunch of different digital asset arrays or baskets that you can choose once you create an account and log in on their platform, and each one is a little bit different. They focus on a different basket of assets that might focus on a niche in the industry or what have you. There's one here called on the screen here. You can see it's a blockchain index. There's a bunch of different assets within it, and they have their own ideas and metrics. But it's more of a hedge fund. And unfortunately, again, American and Canadian investors are excluded, I think, completely. But I think they're working on that. So we'll see. Something to keep an eye on. It's interesting. Oh, and I believe the token is separate, obviously, from all the other underlying baskets that you can pick, and you can find more information about how that exactly works and what the token does on their website. Polychain Capital. This is not something that's publicly available, but I just thought it was interesting. So, unfortunately, like if I could have bought this in a year ago or so, whenever they formed, I would have jumped on it so quick. It'd make your head spin, probably. If you don't know who Olaf Carlson-Wee is, he's a founder of Polychain. He was employee number 1 at Coinbase and a current board member of the Tezos Foundation, which is another interesting protocol that you may or may not have heard about. So I don't know who can invest. I guess it's just certain high net worth individuals. But yeah, just kind of interesting stuff. There's a note here. I guess they decided against going public in early this year, 2018, for whatever reasons. So that's okay. Prism, one of Eric Voorhees's companies. I don't know if anyone else is involved, but he's also the founder of Shapeshift. A lot of people are familiar with that. I got early beta access to this, to Prism to try it out in late 2017, early 2018. It's interesting. I like it. It lets you form a bit of a personal index fund, or you can follow other people's and copy them. But the fees are quite high comparably to other options, and there was also some kind of a cap on your earnings. I believe once you received 100% of, basically once you've doubled your amount of your fund, it just gets liquidated into Ethereum automatically. So I didn't really like that. It's not sustainable over a long period of time, let's say 10 years, which I look at these things at as a way to invest over the long term personally. So it wasn't. It's still interesting, and I know that they're working on making some changes, and hopefully soon we'll see some more coming with Prism. So keep an eye on that, perhaps. And we got TAS, token as a service fund. So again, this is an ERC20 token that they pay out a percentage of revenue to the token holders. It has a bunch of different tokens and assets, and I guess they also invest in ICOs. So this is definitely more along the lines of a hedge fund. But you, I believe, can buy this. So that's interesting, and it's available on multiple exchanges. But it's not really an index fund that would, track the market. And of course, Dogecoin. We mentioned this earlier. Maybe you don't need an index fund, right? Maybe you just need a Dogecoin because Dogecoin's always one Doge. So one Doge is one Doge, right? Anyway, this guy seems like he knows what he's doing. All right. So I remember the first time I did this presentation. About a week later, Coinbase announced that they're coming out with an index fund. And I remember telling people, I think this is going to be important. I think index funds are going to be important. And then, Coinbase comes out, probably to certain people, right? They're just not going to understand how to do all these things or how to buy coins or how to use exchanges, but they understand that they're important and they're interesting and they want to get involved. And this might be a way for people to sort of put, a little bit of their investment portfolio into this new asset class. I believe this note here says it's accredited and investors only, but I think they may have eased that and they're looking at making ways. So we'll probably see some movement here, but definitely keep an eye on that, But I don't really like the metrics that they've used here for this personally. I don't think it's rebalanced quickly enough or as often as it should be, and other things ideally for what I want. And I would like flexibility in those, a lot more options. And do you really hold the underlying assets is the other thing to think about too when you're looking at these different funds. There's a difference between somebody else managing something for you and you actually holding your private keys. So keep that in mind. So, and then there's the Apex fund. This is I thought was really interesting. It's more like a hedge fund. It's a fund of funds, right? So there's all these really cool big hedge funds that you might not have access to. The top 10 funds, I guess, they were doing, and then they would include all those into this other fund that you could buy, which is even more broadly exposed to different parts of the market. But again, as a hedge fund, there's 15% annual fees, a lot higher than certain other funds. Again, there's a trend here: accredited investors only, right? They had an ICO in May of 2018. So what do you know, right? So maybe if you're an accredited investor, it's great, it's interesting to you, but check it out, I guess. And so I mentioned the 2030, and that's David Siegel's one of his projects, among others, Cryptex and the Pillar token. And I do want to. He's actually the way I got interested in index funds to begin with, and was reading some of his things on Medium and other places where he's done some writings and videos. And there's a video that I'm going to share with you guys in the comments. So check that out because I think I'll touch on that in a minute here. But basically, they were going to offer this, I think, to anybody. But again, they had some issues, and they were going to form this Cryptex token. I thought it was going to be the top 30, but maybe they were going to expand it. I believe it's only going to be for high net worth individual, like accredited investors and institutional investors, because of the same old issues that everybody in the space has been having. So, it's like I said, it's a pretty common theme for a number of reasons. Unfortunate as I believe it may be, it is the way it is. But keep an eye on what he's building. David's a really, really smart guy and has a lot to say. I think is worth listening to. CoinVest, right? So this is really cool, and believe it or not, I believe this is actually available to the regular people, retail investors, and this is a really a new thing. It's came out in early or late spring 2018. They had an ICO and they're building their platform, and what it's going to do, basically you're going to be able to build a virtual portfolio or fund that you would manage yourself. And I don't think they have preset how would you put that, weighting that would change automatically over time, so that it would trade out in and out of assets for you. You'd probably have to do that at this point, but maybe they'll add that functionality so that you can have something that tracks the market long term and changes. So, but it is really interesting. It's kind of a unique thing. Basically, there's a liquidity pool that was created in the ICO, and I think it still gets built bigger off the fees or something like that. You probably want to check their website for more detailed information, or find a video on YouTube that has more a longer detailed explanation of how it works. But basically an underlying asset liquidity pool of the coin token, and you can choose which assets you want in your own personal fund. Um, and then there's an oracle that would match the price of each asset, so that, and you can liquidate it into coin token at any time, which you could then sell on an external exchange for whatever you want, whether that's Bitcoin or Litecoin or Ethereum or fiat currency. So, and I think they're looking at building their own proprietary hardware wallet in the next maybe 6 months or something. Um, so it's definitely unique. I think it's interesting. I like it. So we'll see how that comes along in the next little while. And of course, Crypto 20. So full disclosure, I had Crypto 20 since the fund was started, and I love this token. So I may be biased, but like I said, I did dozens and dozens of research, dozens and dozens of different of these types of tokens and funds, and among the ones that are even, this is available for retail investors, and there's not that many that are, out of all the dozens and dozens that I researched, and of those, most of them are pretty uninteresting. But I think Crypto 20 is great, and the team is fantastic. They have great communication. They've been audited by third party, auditing firms, just like anyone would in the regular business world. Um, and they have a new company, a parent company called Invictus Capital. And they just had another fund come out called Hyperion, which is interesting as well. And so their fees are extremely low, 0.5% per year, which is just crazy. Just, it's unheard of. How can you compete with that? They, even, they're doing these trades, so they have these preset market weighting that they used machine learning and data science and did like 360 or something back tests to find the optimal system and metrics to use in their fund. So there's some details there on their website and other, like I said, other videos and stuff you can check out. But basically, it self adjusts weekly, so that over time, if a new asset class gets emerges and comes up the market cap and begins to take over, what that means is, I'll touch on that again in a little bit. But I think for something like this, that you want to hold for 10 years or 20 years. But there is, like I mentioned, the issue with holding your private keys always comes up with any of these, and until we get to the point where we see things that incorporate atomic swaps or something like that, so that you can always hold the underlying assets. But Crypto 20 is really, really groundbreaking. So why should you care about crypto index funds? Well, I don't know. That's something you're gonna have to decide for yourself. Maybe you want to be a Bitcoin maximalist, but in my mind, these kind of things, they provide some stability against your own biases for trading. For example, like if you can get something that has preset, metrics based on math, or something that you buy and you just hold for a long term, you're less likely to, because we're all biased whether we like it or not, right? So this is kind of like a new index funds, in my opinion, are kind of like a new asset class within this new asset class. So my view is that trading is a net zero game, and I mentioned David Siegel from the Cryptex and the Pillar project. I'm gonna leave a link in the below the video for you guys to he has about an hour long talk called Postmodern Portfolio Theory, and he talks about why these things are could be important in the long term, and he does a much better job explaining them than I would. So like I said, I'll leave a link. You can also find that video at the bottom of the info and resources page at bitcoinandbeers.com, which is our group. So check that out for sure. I'll briefly touch on what black swan events are. That's one of the things that these funds can protect you against, because the black swan event is an event that comes as a surprise, has a major effect, and is often inappropriately rationalized. Okay, so basically, history is told by these events, right? So things that the unknown unknowns, basically. So there's a book by Nicholas Taleb called The Black Swan. You should definitely want to check that out if you're interested in that, learning more. But some examples might be like Mount Gox, or the dot-com bubble, the September 11th attacks, the 2008 housing market crash, or hyperinflation in different countries around the world. Pokemon Go. Who knows what's happening next? So, for another reason they might be important is the fees. It's you see with some of these hedge funds and actively managed funds, the fees are extremely low, maybe 0.5%, as opposed to say 20% or something annually. Over 10 or 20 years, that adds up to a lot of money. And even if you try to do the trading yourself, you still can't compete for 0.5% of your fund. Like if you go, especially if let's say you have 20 or even 10 different assets in your index fund, and you need to trade once a week or once a month to keep it balanced. Well, if you go ahead and try to do it, I haven't done the math exactly, but I can almost guarantee you it's a significant amount, probably more than what some of these funds are going to charge you to do it. So essentially, their fees are free, in my kind of view. So what's it say? Wall Street fees wipe out 2.5 billion in a New York City pension fund gain. When you do the math on what we pay Wall Street to actively manage our funds, they say, it's shocking to realize that fees have not only wiped out any benefit to the funds, but have in fact cost taxpayers billions of dollars in lost returns. Wow. So yeah, that gives you kind of a little perspective. How big of a deal are the fees? You can look at this company called T-Zero. They're building their whole business model on taking on putting these fees back in the hands of the investors. So global investment banking fees in 2017, 103 billion. Wow. That's almost like the entire market cap of Bitcoin until just not that long ago. In 1 year. So it gives you food for thought again. So who knows the future of crypto? Again, so this is again why might index funds be important? Well, we don't know the future. We don't know the unknown unknowns, right? Will something replace Bitcoin? Will the flippening happen? Will DAGs like Hashgraph or something take over and become the new Bitcoin? Will it rain tomorrow? Should I buy Tron? Who knows, right? There's a lot that we don't know. If the next Google or Amazon of crypto gets invented in a year from now, and you have one of these self-adjusting index funds, and it moves up it might go 1,000x. Maybe you won't catch it when it's $1 as it goes to 1,000, but maybe you'll catch it when it's $50 or $100, right? And you won't have to worry about this, about as much about a hedge against the unknown unknowns. But there's one thing I do know for sure. Cheers, guys. Thanks for watching, and check out the notes in the video below.